So much is new this week. Huge strikes in Iran. Iran's Ayatollah dead. Can crypto do well in such an unstable environment? Well, the answer might surprise you. Today, Paul from DEVVE joins us to dive deeper into the price action and what it may be telling us. Welcome to the Crypto Rain channel in our family. If you ever wanted to solve your money problems by making your money work so well for you, you didn't have to worry about money again. Almost like Forrest Gump after the shrimp boat business did so well for him. How would that feel having that taken care of? And isn't that really why we all really came into crypto? Now, what if you learned to use your money to work for you just right so that you didn't ever have to worry about money again? Now, personally, I grew up poor in life, which meant secondhand clothes, packed lunches every day for school. And it isn't bad to grow up that way. And it did teach me a very valuable lesson that the true value of money is that money allows us options in life. Additionally, while it can decrease that gnawing worry we carry of how do we meet all these financial obligations and perhaps afford it the nicer things that we want and the travel we want. After a few months of being in crypto, when I started 8 years ago, I recognized crypto investment done right had the most amazing, massive potential to allow us to get to a place where we never had to worry about money again. Now, after 8 years of being in crypto, I know that crypto can and will change your finances and your life, but there's a catch. Crypto investment works amazingly well towards your goals when you take the right actions. You see, while being in crypto, I learned something very troubling. You see, I know people who have been in crypto longer than I have, and yet they are stuck pretty close to where they were when they started and barely getting by. I learned that 95% of people in crypto don't make meaningful money or flat out lose money. And it's only 5% of crypto investors that make life-changing gains that take them into the lifestyle we all dreamed about as kids. Well, haven't we learned in life that if you find what the successful are doing and copy exactly how they do things, you start having their results? So I focused on figuring out exactly what that 5% did and put it into practice myself, which by 2021, using those principles, I was able to fire my day job, move to the city I wanted, and put myself in position to never have to work again if I didn't want to. Now, here on this channel is where I share what I learned. I share my research on the companies I like and why I like them. Specifically, today is our price analysis day, which we normally do on Wednesdays, but we had a schedule change so that we could still come to you this week. We're doing it today. This is a day where we combine what I've learned with our special guest, Paul, joining us from DEVVE. Now, Paul has 30 years price analysis experience analyzing charts and is a fun time looking at the price movements, what is happening to see what might be cheap, what might be really cheap, what might be expensive, and what might be about to explode. Now, if you are looking to be part of that 5% that makes the life-changing gains, join the Patreon in the link below, and that will give you access to our Rainmaker private Discord. A really critical part of really making wealth in crypto is surrounding yourself with people who have learned and are learning to do things the right way. That is exactly how you get good at this. Do note, Paul and I are not your financial advisors. We are investors ourselves. Paul looks at many different markets, and none of this be taken as financial advice. So go ahead, make it rain on that like button, strap in for the show. Paul is joining us now. Paul, so good to have you here.
Great to be here. Thank you for making the change in the schedule for me. It was I had a clash tomorrow, but to be fair, I think it's, given the way everything's trading, it's a good idea to be doing things a bit earlier this week, just to see, what and how the markets might be unfolding. Actually, what's quite interesting about Tuesdays is when you typically get this type of panic on a Friday that goes into the weekend, and all the orders are building up over the weekend and desperate to be executed on the Monday. You get the Monday and the Tuesday follow through of panic, and it goes right around the world, so everyone gets to see the trade, as it were. And then by Tuesday kind of evening, things start to recover, if we're going to see a bounce and a turnaround in the market. So the timing could be really good for a change in trend. We'll have to see. So this is a good time to be looking at it. And you know, I also sort of smile a little bit when you say a fun. It is a fun time to look at the charts, not necessarily a fun time, for what's going on in the world. So, but this is again, it's an important point. Like, what we're trying to do here is differentiate between the emotion of the markets, the emotion of what's going on, which is always what draws people into making mistakes, and actually just sticking to a plan and sticking to things that kind of drive the markets in the long term and are more stable things to focus on, rather than panicking because of short term headlines and things like that. So yeah, I mean, it's going to be an interesting time to look through the markets, that's for sure.
What's really interesting is sometimes crypto really runs amidst turmoil. Now, most people don't remember this closely, but having lived through it, in early 2021 was way more tumultuous than everyone seems to remember. Now, I was following US things going on in the US, and Donald Trump had been the president. And, everyone went to sleep that night. Trump was ahead and solidly winning the presidency. And by morning, Joe Biden was ahead in the lead. And there was, reports of cheating, and, oh, wait, there's no cheating. And, oh, they stole the election. They didn't steal the election. And so then there was that January 6th turmoil. And then it was like, oh, Trump's never going to let Biden be president. And this is all early 2021. And it was questionable whether the US was going to be in a civil war both January and February. So as much as there's turmoil going on in Iran, and people think that crypto can never run in that environment, 2021 showed differently. Now, it all resolved peacefully. There was a peaceful transition of power to Biden. There wasn't some civil war of Trump holding on to it and not turning it over like many suspected there would be. And but going back to that, it was really actually quite tense, and most people have forgotten because it all resolved pretty well. So here we are in 2026, and Trump's presidency this time has been interesting. I mean, we have Venezuela, looks so different. Iran. I've actually known a lot of Iranians, and they're very happy about actually the Ayatollah being gone, and they're very optimistic about the future for Iran. And I'm really excited for the Iranian people to hopefully have more say in their governance, but we will see how this plays out. So it's kind of like unknown, right? Like, all we know is bombs going off and Ayatollah's gone. We don't know what power structure is going to take over, and we don't really know if it's going to be a good or bad thing yet. But I think so many people are hopeful, and that's good. And so as we go through this turmoil in this year, I look at the markets and be like, well, what is the price action telling us? What are the markets really saying might be likely in 2026? Now, I'm curious, Paul, what markets are you following? What interesting trends are you seeing in some of the different markets you track?
Well, I think what Chris has asked as a question here actually gets to the heart of what I was going to talk about. And the art of, really understanding something is to ask good questions. My thinking here was, why did crypto go down so fast when nothing was moving? And it's not like the people who are in charge didn't know that they were going to do what they were going to do. Some people saw it from other areas and were talking about it, but there was this big lead up and potential rally in oil, and there were the first signs of it. Actually, independently, I was bullish on oil, but I saw it as more of a commodity play. I wasn't really following the prospect of this situation that closely. But what makes sense is that the link between the cost of mining Bitcoin and energy, and the general energy costs, when energy's low, oil's been low, Bitcoin's been able to go higher. When oil potentially goes much higher, the market is forward looking. That is one of the reasons that can pull the market down. And if we go back a couple of months and think we know oil's going to go up a lot, and you've got Bitcoin holdings, you might start to lighten up. So, I know that's a post hoc analysis, but that's kind of where the chart kind of gives away what's going on. And that's why I don't tend to look for reasons, because in some ways you can never really know why the market's doing what it's doing. But that now seems to make quite a lot more sense. Now, the question here is, given the massive risk off that we've seen, has this changed the whole scope of the market? And I don't think it has. I think what we're seeing here is a reaction that we'll know very quickly whether there's more to go on the downside. But I don't like to see reactions that come with news in this way, because usually it's a fair trade. And I think structurally the market has been on the floor in terms of Bitcoin and very bearish in terms of the equity markets. The positioning is more on the short side than it is on the long side. So that doesn't mean it won't go down. It doesn't mean it won't shake out some more. It's just that, are we moving into a structural bear market? I would say we're not. And that is that's an early call, but we're already starting to see some form of recovery. Now, that doesn't mean oil's not going to go up, because remember, if you look at what's happened to base metals, precious metals, all commodities. So I got the Aussie dollar up here. If you look at what's happening to oil and then compare it to what's happened with gold and silver and other commodities, oil hasn't really moved. So if you were just to say, look, these commodities, aluminium's moving higher, so Apple are raising their prices, etc. They use a lot of aluminium in their computers, their bodies, etc. So if the prices of things are moving up and one commodity is not moving higher, then it starts to look a little bit like the gold silver trade, where gold was moving up so aggressively and silver didn't move, and then all of a sudden silver took over. So I know it's being driven obviously by these events, but it's interesting how the kind of technicals falls into place with what's going on in the world. Now, in previous moves, that might have been something that was going on in between Israel and Iran, and it was a skirmish that we've seen before, and it evaporated into oil coming back down. It feels different because now we've got an upward trend in broader commodities, and that seems to be the direction that is most likely to continue this year. So I don't think oil will necessarily come down that much, and maybe could really start to run much further than people think. So given that scenario and the destabilization of that area, what does that mean for the markets generally? Well, the markets don't mind war. War can be profitable, and the inflation is also something that goes back into the equity markets. Now, with regard to crypto, from last week, we were looking at the structure, saying that it looks like sentiment is on the floor. And as Chris has just asked a very good question, we've had a big move down in all the equity markets. Crypto hasn't really moved, and it would have taken the brunt over the weekend because there was nothing else to trade. So what it looks like to me is there is saturation in the selling, and therefore we will get an extended rebound from here. Now, whether that's enough to move into some form of bull market and a recovery all the way back over 100,000, at this stage, I think it's a bit early to be calling for that, but certainly enough for possibly a decent relief rally. And if nothing else, we seem to be on the path of a correction that, whilst it could continue, even if this does rally and then keep going down again, it looks like a phase that is not one that's a structural bear market. It's one that is will play out into a point where I think we're going to see a very nice base that could give a good risk reward for some longer term positions. So I think structurally, again, looking at the way we looked at it last week, the market to me was short term buy, longer term, we just need to be a bit more cautious and wait. And I've still in the background got this question mark over the end of this trend and what it normally looks like. And whilst there are some people who said, well, it was crazy going up to 120,000, and that I did have people calling me up saying I wanted to buy Bitcoin and they didn't know what they were doing. I still don't feel that we've got that final blowout that feels more like what we saw during the dot-com boom. And again, it doesn't mean that we definitely have to have that, but that's usually a really good sign. I mean, we got part of it when you, for those of you that don't trade gold and silver, from the outside, you could see what was going on. Suddenly, it was all anybody was talking about, and then boom, it flipped. Now, I don't think that trend is over, but it's over in the short term, but not in the long term. Maybe that's how I could describe the way Bitcoin is. Hitting 120 might be coming down in the short term, but it's more a consolidation correction, and then it will recover. Now, how long it takes, I'm not sure, but the longer it goes on for, I think the bigger the rally will be, because it will clear out people. And again, we had that kind of deep discussion about, is it a technology that is here to stay? And I think it is. It makes sense that it is. Could I be wrong? Yes, absolutely. No one's got the monopoly on being wrong. So I'm always kind of double checking what I'm thinking. But there's enough of a market, there's enough of a kind of industrial kind of business around Bitcoin, and enough technology that could really change the world and have more and more applications, and there's many vested interests in making it work, even when people can't see exactly what that will be. In the same way, when the internet was created, they couldn't really see all of the shopping that would be done, the delivery of videos and all that stuff. That what looks obvious now, back then, was really a pipe dream, or nobody was talking about, nobody expected it. So so the world will change a lot in the next few years, that's for sure. And I don't think this technology is going to go away. And that's an important point, because it goes back to the way that you look at the markets more than the way I look at the markets. Is there something fundamentally going on behind the scenes, or is it all hype? And there are businesses out there that are working extremely hard, and they may be criticized because their tokens are down, but actually they're just getting on with their business, and that's what they should do. And when it comes to kind of market sentiment, you can't help what the crowds think. And a great example of that is a few years ago, everyone hated the stocks of anything that had anything to do with the precious metals and the miners. And even though they were printing loads of money, the market didn't care. They ignored it. They all bought AI stocks and thought that was where the money was. Now, they could be right, but companies that are making like 10% a year or more and giving big dividends, they just ignored it. And you might think, well, why would they do that? Just because of sentiment. And then all of a sudden, again, as we've said, things can change very quickly, and do change very quickly. Suddenly everyone wakes up to the fact that there's money there, and they all run towards, like everyone running towards the plane in the old days when you didn't have an allocated seat. Actually, that's probably a European thing, not so much in where you guys are. But it always reminds me, like the market reminds me of that scenario sometimes, where we've got these budget airlines, and what they used to do was just terrible. They wouldn't assign your seat. So what would happen is they would open the gates, and then everyone would just run to get a seat, and then afterwards they would all be running to get out of it. And it would just remind me of how people react to markets. It was just kind of funny, really. But
that is a good analogy. We totally see that in different narratives hit, right?
Yeah, exactly.
So yeah, so 2 years ago, you're saying everyone was focused on the AI narrative, AI, and they were leaving precious metals, even though they paid such high dividends. And the last 6 months, precious metals has been the narrative.
Exactly. So I can't do what you do, Rain. I don't look at companies. I mean, I know from Manu and what he's doing at Definity. I know what he's doing is amazing. I can't say any more than I have complete and utter trust, but it doesn't mean that I don't look at other companies and I don't do that sort of analysis. That's not how it works for me. So I don't do fundamental analysis in that way. So I'm not looking at companies like that. I'm looking at sentiment, but I can totally see, like when a very good fund manager friend of mine was saying he was buying investing money every month into these gold and silver miners and in precious metals, and I was just looking at the charts when they were kind of going down or sideways. I was like, well, yeah, I can see your thesis, I see why you're doing it, but I can't see the price action moving. So until it starts moving, that's when I'm interested. And then when it starts moving, I see it happening. So I'm not also not saying that my method is better than anyone else's. It's just how I see things. I will always miss the lows in the market because because I'm looking for trends, and trends, I'm looking for signs that they will continue, and I get caught out. And I was bullish on European equities last week, and they look like they're all ready to break out, and I got it right in the face. So these things happen, but I'm not that you put your trading hat on, and that's what you expect. You expect to get things wrong. It's not getting it wrong, it's how wrong you are and how you protect your positions, again, which was a conversation we had last week. But I think the important point of where we are is to work out whether we're in a structural bear market in everything, and it doesn't feel right that
Oh,
hello.
we cut you off when I changed the screen to this screen.
Oh, okay.
This was last bull market, and it just feels some similarities. So in early March and April, Bitcoin really topped here, and then it started this downtrend. And many people said that the bull market was over, and they were wrong. They're like, "Oh, bear market incoming. The market's dead." And that was just this fake out. So it went up from, it had been floating around 9,000, went up to 65,000, and then it came down to under 30, and people were calling it for a $12,000 Bitcoin. Then it went back up and went to 70. Now this period happened fairly quick. So in May, it's still pretty high. By July, it's bottomed, and then it's starting right back up. And by November was the next top. So October and November, or September, October, November, Bitcoin really took off. And I wonder if it's not too different what's happening here.
Yeah, I mean, it's certainly possible. I mean, if we look at structurally where the markets are, start off with the Dow, and we can see it's had a correction. Now, if you didn't know the news, if you didn't know what had happened in the world, and you look at that, you'd say, well, it's just a normal correction. It's just like it's done it before. There was a bigger correction in the early part of last year on the tariffs, Freedom Day, the big move into that, and the market recovered. And so, of course, the game's not over. This week's not over, and we don't know what's going to come next. But so far, given the news, this is holding up pretty well, I would say, and it's already starting to bounce. So I'm not saying it's a buy. I'm just commenting on where it seems to be and whether it's anything out of the ordinary. And of course, it's quite reasonable for a market to correct. It can't go up in a straight line. The S&P, big support here at 68, between 67, 80 and 68. It's broken through that. But actually, if we look at where we are now, look, it's recovered all the way back up, So there's definitely some buying or covering going on for people who are already short. So that's already a sign to me that this could be much stronger than people expect. Now, gold has gone up. It looked like it was going to break into a new high. It's off $200, down 4 or 5%. Trend is still up, but if people had fear, that's a fair trade. If it's trading on fear, it's come off, isn't it? Silver's come off as well. That's still in a range. And we talked about it last week again about, Does it look like it's going to break into new highs, or is it more likely to consolidate? And it seems like there's still too much volatility here for it to go into a new upward trend. It needs to calm down a bit, and certainly the news has not helped. But anyone who was panicking into buying on the news on Monday morning, got to buy gold, there's going to be World War III, we've got to think, well, what's happened to their positions? Their positions are underwater at the moment, and let's see how they trade. Now, it doesn't change the trend, but it does look very much like this is a consolidation. Market just needs to calm down a little bit. With regard to yields, I was saying last week that the price of what have we got here? Is it 3-year? I thought it might be 2-year. 3-year US yields and 10-year US yields both were looking quite soft, and there's been this rebound. I guess that could be on inflation, and it could be on US assets because of what's happened. But either way, there is a rebound. But to be fair, there was a rebound in practically every other major bond yield. Price went down, yields went up. So this is just kind of falling into line with what everything else did. And so the spreads have moved away from those countries more in favor of the US. So in other words, when you're looking to put your money somewhere in 10-year yields and you're looking to see which is going to give you the best interest rate, prior to last week, other countries were giving a better rate relatively, and that was widening out. So we'd say spreads were widening. With this rebound in yield, spreads have kind of tightened a little bit or come in a little bit. So the difference isn't quite so big. And that, along with the news flow, along with the fear trade, has pushed the dollar higher. And again, that's usually a risk off trade. And I associate risk off trades with things that would sell anything that's considered to be, of course, risky. And Bitcoin comes into that, and altcoins and all the others. But even though that has happened, there seems to be a bit of saturation going on in the price action, which goes back to the question that we were asking at the top of the show: is this pointing to a short-term low? And it seems like the evidence is saying yes, especially if we look at coin market cap, and we were down at like 5% on the low, and it seems to have gone up. I mean, the fear trade is back over 20. I would have thought that would be a bit lower, but I suppose it's not quite so low because the market hasn't followed through with everything else. So that could be why. Now we've got this overhead resistance here at 70,000. You see how it's got close to it, it's not quite broken it. I would like to see that gone, of course. I think that's where a real squeeze would happen. But it wouldn't surprise me if the market is bailed out of it, expecting, fresh lows given the headlines, and we will now see where it really wants to go. Big picture, yeah, we've got this downward trend line here. We've got the moving average going down. Those two things point to caution. At the moment, it would point to a relief rally rather than a change in trend. We do need to see more of a consolidation at the low. The bigger the consolidation, the better the base, the more stable that rally will be. And sometimes this can take a bit of time, more than a few months. But certainly we'll take the positive news where we can. And I don't want to put rose tinted glasses on. I want to look at it in a realistic point of view. And from that angle, the fact that things haven't gone any lower would suggest that this is getting ready perhaps for an interim rebound that could be quite interesting. But we'll have to see. Of course, there's overhead resistance, and there'll be another week until we look at it. So a lot can happen in a week in the world, but I would suggest that this has got some potential to rally. And if we look at ETH, it's pretty much trading exactly the same way. We've got this consolidation. This would normally be some form of continuation pattern. If I zoom in here, let's just get that. I'll just move it up a bit. Hold on a second so you can see it. So this would normally be a continuation pattern. Again, I think we talked about that last week, the way these highs were getting lower, and you would normally expect follow through. So you'd start getting ready to short it for a break of the low, and it just pop straight back up against the that expectation. So that was like a warning sign that actually the shorts positions that were building were going to be squeezed. There wasn't enough to carry it through because, of course, this news was in the pipeline, and there will be people out there who knew about it. So that's kind of put the market into a range. So we've got some very good levels, what I would call trigger levels, with which to trade off. One being this 21.56, or the highs, all these highs. Essentially, we've got a breakout level to the upside if it gets over 21.56, and a breakout level to the downside if it gets below this kind of fledgling support line here. So sitting on your hands might be a good strategy until it's clear, but I think the bias from last week kind of flows into this week as well, that we are close to an interim low and we should see some form of bounce.
It's going to be interesting to see how this year overall plays out. Jerome Powell is set to step down in 2 months, and a new Fed chairman coming in for the U.S. The Federal Reserve has switched to quantitative easing, and this usually puts a lot of money in the market if quantitative easing and then interest rates continue to come down. That flushes a lot of money into the markets, and then people tend to go into risk on, and crypto is squarely in risk on. We'll see if that drives crypto to new highs, or if people are right with their crypto predictions that Bitcoin has topped and we're in for a bear market. I tend to think that it's going to play out a little bit like 2021, but just over a longer time period, or a big pullback, a big scare, so that it washes out all the liquidity, and few people are expecting it to really run. But we'll really know more in 3 months.
Yeah, I mean, there's an expectation that rates are going to go down, and I think given that there is turmoil in the markets, there is an excuse for it. And I think if the numbers out of the US, inflation and jobs numbers, start to look bad, it's a great excuse to to cut rates. And we know, we had a long discussion about Trump, didn't we? And one thing you can say about him is there are things that he does that I totally agree with, but there are other things that I think you have to be careful of, because you can end up causing further problems down the road. And I'm not going to say numbers are manipulated, but the figures haven't been released because of the debt ceiling problem, or whatever it was, the budgets. They weren't there to collect the data, so the data went dark. But if he wants interest rates down, and he's publicly said he wants interest rates down, it becomes more of a political issue to make his presidency look good, as opposed to what's right for the market. Sometimes it's right for the markets to raise interest rates because it's going to take the heat out of a system that's going to cause problems. And 2007 being 2008 type too much money in the system type problems, you need interest rates to go up to take that pressure off early on. And if you're politically going to drop interest rates because you want your presidency to look better, it can be dangerous. And well, it's not, it can be, it is dangerous. Further down the line, that will cause a crash. It's just that it might not cause it on his watch. It might cause it on someone else's watch. So there's always a price to pay for it. It's nothing's free in the markets.
What
So
do you think?
It might seem good now, but it might not be later.
What do you think about the arguments that there's deflationary pressures coming more than most people are really looking at? And so in a deflationary market, printing more money like that and bringing interest rates down so that more money comes into the market is good. I'm looking at things, and first of all, the government's numbers on inflation is like 3-point-something%. But Trueflation is suggesting that actual inflation is somewhere around 1, like low ones. And so there's a huge gap. Now on CPI, about 40% of the numbers used for the consumer price index And the inflation there are guesstimates, not even like actual data. They're just based on guesses. So many are starting to use trueflation as the number. And if real inflation is really just over 1% in that environment, stimulus makes sense. And it's not near as risky. Now, if inflation is already high, then you print in that environment, there's huge ramifications. Now, I also couple in like AI, and like a lot of people are worried about AI taking their jobs, and they're right to be looking at that. Now, if you're in whatever job and you learn to use AI, which makes you more effective, that's a good way to secure your job. But talking to some programmers, they're like, I can get the same amount done with 20% of my programmers that are really good with AI. And I can save massive costs, which is going to bring down costs, not just in software production, but many other things. And AI assistants can take off a lot of roles, which means less jobs, but also products and services start costing a lot less because of the
Yeah.
use of AI. So yes, more people become unemployed and have to reshift their focus. And yet also prices start coming down massively. In an environment where prices come down, it's a different type of problem that doesn't happen very much. But when it does, it's an environment where if you put more money into the system, it helps.
So the inflation argument is one that I've heard elsewhere, and it is possible that inflation is a bit lower, but where we're seeing the pressure in base and precious metals, certainly base metals increase the cost of everything. Copper wires,
Copper.
building homes, building cars, all the metal that's in cars. And now we've got undoubtedly a rebound in oil, which makes everything more expensive. So it's going to make the cost of whatever you do more expensive. So that's a problem. Now,
So we've got
is it
copper, steel, timber, all doing fairly higher numbers, and then oil.
well,
Which
lumber actually isn't. Lumber's been sideways, but
yeah,
certainly base metals and most base metals are going up and going up fast. So that would suggest that there's inflation coming into the system, even if it's not clear in the numbers that we're seeing on the street. But I don't know where it is, where everybody watching this show is, but I can certainly tell you that if you go to a pub in London and you buy a beer, it can cost you anything between £7 and £9, and sometimes more, which is $12-15 for a pint of beer. And so that's just one thing. I mean, I know beer's not everything. Well, it's pretty much everything. It's quite a lot. It's what a lot of people focus on, the cost of real things. Now, it's been nice that petrol prices have been relatively low, but that's not going to stay. So yeah, maybe that's an excuse to cut interest rates. One of the big policy mistakes of the 2007-8 crisis was certainly the Bank of England was raising interest rates to try and rein in inflation because oil was hitting $147, which was crucifying the man on the street, the man and woman, of course, because they were paying much more for everything, and at the same time they were raising interest rates, and they ended up having to bring them down because it was causing a deflationary bust. So I think there are phases to this that aren't really very clear, and we might be in more of an inflationary phase that's kind of masked by perhaps the short-term figures and expectations, and that is only going to get worse. So the short-term in deflationary or lack of inflation numbers that we're seeing, I hate to use the Fed term, could be transitory, and we'll be looking at much worse numbers, but it could be too late by then. And the problem is maybe one for 2027. Perhaps we're not going to see it much in this year. So, and that's when the damage will potentially be done. But yeah, I mean, look, making the argument for lower rates, whether we should or not, in the end, is academic. It's what is going to happen. That's how I see it. What is going to happen is I think we are going to get lower interest rates, and I think that's why the market seems to be could potentially be supported, may well be bought up on this retracement. There may be some overhang of markets that are affected by higher oil prices, especially, stock market likes it. Certain oil stocks like it, of course. And I've mentioned war can be good for the market, but other things that are more directly, impacted by it, like Bitcoin miners or other miners, maybe there's a bit more to go before this gets absorbed into the price, but I don't think it changes the longer term direction, which is after a correction. I think things will go back up. So there's a few phases of this game to play out, and we're going to have to just see what the chess moves are as we go. And that's the kind of beauty of doing something every week. We can see where we are in that, but not a lot's really changed in my view from the kind of broad strategy of I still think we're in this risk on, but it's kind of becoming quite volatile, and we are just looking for signs that the risk on trades are coming back in to the crypto market at the right time, even though the macro scene seems to favor it. We've seen how the equity markets have broadly kind of brushed off every negative market event so far. Nothing lasts forever, and there has to always be some form of correction, but we shall see how well this gets shrugged off.
Yeah, because it applies, I'm going to skip down to this question. It somewhat relates to what we're talking about. Question: why did we have a 4-year cycle with no altcoin bull run?
Yeah, I don't know. It's the short answer. That's not the sort of question that I answer, really. I don't look so much at the Bitcoin cycle. I hear other people talk about it. What I look for is the macro scene and whether that's supportive of the trend, or whether it's, would attenuate the trend, and then how the price action sits within it. My expectation was that Bitcoin would run, and that was right. And my expectation was also that, altcoins would follow, because Bitcoin ran so hard and everything was looking like it would break out, and because we had finally had an administration in America that was very positive on this stuff, whereas for years we've sat with people saying very negative things and trying to effectively ban it, and that was wrong. I was wrong about it. It things didn't run, and it didn't follow. So, it's important to see the signs early that you're wrong, and try to make adjustments for it, as I said. But I don't know why it's happened that way. Partly it could be, I mean, I can only proffer some ideas, and it could be that that's what everyone was looking for. And sometimes these correlations happen and they work really, really well, and then everyone jumps on board and they just break down, and that could be one answer to it. But to be quite honest, I don't know. I'm not sure why that. I mean, I don't know if you have I know you look at the 4-year cycle.
Yeah,
so
I definitely have some thoughts on that, because I asked myself that same question. There was a lot of indicators that 2025 might be solid, because it was the year after the Bitcoin halving of 2024, which usually drives Bitcoin's price up, and Bitcoin's price did get driven up. Didn't get driven up as high as I felt it should. I felt like the probable top was somewhere between 158 to 175, and it didn't get there. It stopped way short of that. And there was no real altcoin rally. When Trump won, you had a few altcoins, the ISO coins, go up and do a 5x or a 4x, but no real altcoin rally. And why is that? Now, one of the things that was eating at me every day in 2025 was that everyone was expecting a 4-year cycle. When everyone is expecting something, it rarely plays out that way. And everyone leverages that way, which makes it so juicy for major whales to take the opposite position and make massive money by shorting when everyone's so bullish. and liquidating a bunch of positions. And I think that's what happened. There was also a big correlation that I didn't yet understand, which in 2017, the year after the Bitcoin halving, not only did Bitcoin run tremendously, but then that flowed into an altcoin rally. 2021, same thing happened. But what also happened that I think led to it was massive stimulus, massive money, global money supply increasing. And that didn't happen in 2025. That is happening more this year with the US Fed going to quantitative easing and with interest rates likely to come down. So if quantitative easing continues and is really strong, and it has been really strong so far, but if that continues and is strong, and then you also see a decrease in interest rates, then you're going to see money supply growth go crazy, which correlated to 2017 and 2021, but didn't correlate to 2025. And that was probably a much bigger driving factor of the altcoin boom than we realized. Which also then, what I love about 2026 is so many people in the crypto space are expecting a bear market. Remember, when 95% of some people are expecting something, it rarely plays out that way. So I'm quite excited for the chances this year. We'll take a look at Omi and DEVVE and throw that in there if you would like. Retail never joined in. The reason retail never joined in is because we never had the green candles that start things really for them to join in. Plus, I don't think we had the money supply. But remember, Trump's cutting all these checks in the US. I don't know what the details of those are, but like refund checks related to tariffs, that's going to give people a bunch of money. There's a bunch of things that the US is doing that are stimulative, and some other countries too. Now let's jump. We got Near to look at, Layer 0, Jupiter, Dot, and POL. Let's start taking a look at those. Then we can jump into some additional viewer suggestions.
So Near is an interesting one. And, we can see very similar price action that we saw in Bitcoin and ETH down here. We saw the spike down. Let me just move that again. The spike down, the move sideways, the attempt to go lower, it failed with this big green bar. And then this corrective move to the upside, which is pretty much what I'm expecting to happen to Bitcoin. So that's perhaps a little look at the future. Obviously not guaranteed, but that's what I'd expect. Now that looks great from a short-term perspective, and it is a short-term low, but it's really important to zoom out and have a look at the bigger picture. And you look at the bigger picture and see that this is still a major downward trend. It's broken this trend line, which is 0.1. It's got a lot of resistance here at 1.4. And anyone who's kind of bought this short-term move is going to be looking to take some profits around here, I would have thought. So it may struggle to get much higher. I hope it really does. And I think the next big level for it, the big next challenge level, is around 180. But we've still got this big downward trend line here. And whilst it's below these lines, this is the main downward trend line. We've got this one, which is shallow enough that I would regard that as just a resistance line. Hopefully one day we'll be testing that. But this is the main downward trend line, and this is the acceleration. So before I can turn strategically bullish, I need this downward trend line to break. And great, we've got a very fast moving resistance line that's turned, and we've got some really nice price action. So in the short term, there may be more gas in the tank. We could get to 180, and I hope we do. Would I personally be wanting to jump on board? No, because I think we've missed the part of the move that I think where the risk needed to be taken, and there's not enough for me to guarantee that it's going to follow through, even though it probably will go higher. I'd prefer to see this come back down and consolidate for a bit, and then I'd feel better about buying a breakout at that point, or maybe, if this trend line goes. So, on balance, there is probably more upside. So I would say in the short term, it could move higher. But for me, it just has to fall into the weight category. But I'm encouraged by this chart. I think it's really important. to see this type of chart pattern, because it does mean that there's more potential for other markets to be breaking out in a similar way.
This is an interesting one. I'm glad it's on the schedule for today because because of the trend break that Paul just showed, that like the big upward movement on it. Now, I don't know what's driven it. If we look at near on CoinMarketCap, it gives us some additional information that's helpful. Number one, it shows us where the overall market cap is. This tells you how expensive it really is, because token price is only doesn't really give us a good idea of if it's cheap, if it's expensive, how expensive it is. We have to look at token price times the amount of tokens in circulation, and that gives us the market cap. So it's at $1.77 billion in market cap. Now, realize it just jumped tremendously. It went from just under $1 at 97 cents to up to $1.37 today. So huge jump. And I don't know what's driving that. Could be a sign that the crypto market is waking up. Could be a sign that this narrative hit or some kind of news. Now, I couldn't find something specific to this other than Near is trying to position itself related to AI in the crypto space. But other than that, I don't know what's driving this move. Now, it's going into the higher cap coins, which I am in the riskier stuff. So Near isn't one that I'm holding. Is this a buy? It's not at the lows it was at, and I don't know what's happening with this increase. At this point, I would not be buying it. It would just be a wait for me. Like Paul said, that even if you were trying to trade the break to the upside, you missed it. And now it's in a zone where there's too much downside versus the upside. So it's just not a buy zone. It's just a wait and see zone.
Do we know what it does?
Yeah. CoinMarketCap always does a pretty good job telling us. It says about Near, it's a blockchain for AI, a high-performance AI native platform built to power the next generation of decentralized applications and intelligent agents. Now, the truth is every blockchain can work with AI, so this is just the narrative that they're using. Provides the infrastructure that AI needs to transact, operate, and interact across Web 2 and Web 3. Near combines three core elements: user-owned AI, which ensures agents act in users' best interests; intents and chain abstraction, which eliminates blockchain complexity for seamless goal-driven transactions across chains; and a sharded blockchain architecture that delivers scalability, speed, and low-cost execution for real-world AI and Web3 use. So they've just really focused their description of what they're about to AI, because that is a narrative, right? So they're trying to share how we compete. Like, is their blockchain any better than AI compared to something that would have similar speed and low transaction costs? I don't see why it would be. But sharding is the way a lot of your blockchains hit much higher transaction speeds, as well as hopefully lower cost per transaction. So this is just positioning, in my opinion, towards a narrative that's really hot right now. How are they specifically better for AI? I don't know that they are. Maybe there's something I don't know. Let's jump over to layer 0 and see what its price action is doing.
So layer 0 is interesting from the point of view that it based out in November last year, and it's been forming what could be quite a substantial base. And it doesn't mean the volatility is over, but it has been effectively rising since November, whereas some of the other markets we're looking at have only just hit a low and are turning around. So the bases are not as established as this one. Now, if we look at the previous price action and look for the kind of signature that this market has, it's been trading up towards this resistance at 2.6, and it's been pretty volatile within that range, but it keeps coming back to this 2.6 area. So that is kind of golden level that if it can get through there, you know, we're going to start to see an acceleration of the trend. And whilst it's below, we're still in turbulence, so it's going to be difficult to predict short term where it will go. But there is enough to say that there is upward pressure. I mean, we've got this line forming here, and this other one that seems to be, you know, pretty stable for the moment. And at least those are lines that I could use to bail out of the market. Could be tempting to go short term long, you know, small position, to try and fill this gap in here and take it up to this price action. But, you know, I mean, percentage terms, that is a very big move. But, you know, the downside of that is that within this range, it is very unpredictable. And we could have been looking at that around here, and it just came all the way back down again, spiked lower, spiked higher. We have to see the trading signature of the market beforehand. And it's very tempting just to think it's going to slowly just rise up in this really smooth way. And I hope it does, but it may not, may come all the way back down here again and break this line, then go back up again. So just to reiterate, this area here below this line is an area of volatility. But on the positive side, that's usually an indication of a solid base forming. And the fact that it's happened earlier than some of the other markets could mean that this is one that we should definitely keep an eye on. Now, I'm not sure what space it's in, so that could be a clue as to what is, you know, interesting or piquing the interest of investors. Maybe there's something they're seeing, you know, longer term here that we should be aware of. So I'd be interested to see what sector it's in. But certainly for me, from a technical trading point of view, I wouldn't want to see it break 262 without me being on it, or at least being aware of it. So the way it is quite volatile, it can do that quite quickly. So this is another one that we should come back to and definitely have on the radar. But for the moment, I'm going to say it's a wait for me, but it's a very interesting chart. It's more interesting than some that we've seen from the point of view that, as I say, it based out earlier.
Yeah, I'm curious to see what kind of momentum comes into the crypto market, and these may be some early signs. Now, looking at layer 0 in its price analysis, look at this general rounding bottom, and this is an indicator that maybe it's turning around. Now, if it holds an upward trend rather than reversing, come back down, then likely the bottom was already in $1.20. It's trading at $1.84 now. For those that don't know what layer 0 is, it's an omni-chain interoperability protocol designed for lightweight messaging across chains. So it authenticates and guarantees message delivery across these different blockchains. So they say it's a blockchain of blockchains. So essentially supports any blockchain that can run smart contracts, ETH, BNB, Avalanche, Polygon, Arbitrum, as well as some non-EVM chains like Aptos. So it's built to interact across the different blockchains. So this is in the same space that one of my strategic partners, OneChain, is in, which is a very interesting space and I think very underserved. Now, layer 0 was a more recent launch, and they're still benefiting from all the hype related to that. But one of the concerns with it is, look at this unlock schedule. So after they came out, there was initial community drop of a whole bunch of the tokens, and it stayed flat. But look at the token unlocks happening here. And this starts putting a lot of tokens into circulation, which puts downward price pressure on it. Now, if the market goes parabolic, that's not enough to keep the price from going up. It just will slow the rise a little bit, is what it will do. So I like CoinMarketCap because it tells me about unlock schedules. And I learned that that's an important component to keep an eye on, because as you're having more tokens come into supply, often those tokens then get sold, and it puts a downward pressure on things. So it peaked out here at like 720. It's currently $1.80. Now, often when tokens launch, they go through this honeymoon phase where they go up and they reach some kind of momentum. And then, especially in the bear market, they then come down for a while. That's exactly what's happened with Layer Zero. Now their market cap is 563 million. Compare that with OneChain's market cap, which OneChain has already vested all their tokens. OneChain is a deal I like so much better in the same space than Layer Zero. It's hard to tell if Layer Zero is cheap, respectively. And I like to buy low so I can sell high. OneChain's price is definitely very low, which is what I like to see. Let's take a look at, so for me at this price, it's really just a wait. All that token investing coming in. I just like other projects more that I know are low, or that I have a reasonable expectation that they're very low. And it's hard to tell at this price if it's low, if it's medium or high for what it can accomplish. Okay, let's jump over to Jupiter, which is a DEX on Solana, and usually has some interaction across if Solana is going to do well, because Jupiter tends to do well as a lot of activity is coming into Solana and people are using Solana, and usually they're trading on Jupiter.
Yeah. So again, we're seeing this kind of similar, although the spike is not as big on this particular chart, this move down, this short-term consolidation, and then the break of the high resistance point that suggests that we're going to see a further squeeze higher. But it's stymied by the fact that we're still in this big downward trend and there's more work to do. Now, wouldn't it be nice if it could get us all the way to 30 cents? Yeah, that would be fantastic. And I really hope it does get as far as that. But from a technical point of view, I need a bit more evidence that this is based out. This is okay for a short-term rebound, but not enough for a major low. Sentiment does point, as we talked about, to the macro situation, so we can throw that in to the mix, but I'd have to still be slightly cautious. I mean, you could justify a small position in any of them, really, as long as the stop is thought out correctly and you've got good risk reward. So yeah, it's possible to buy at any point on a chart, of course, but for me, I'd have to have a decent stop loss point, which we could find. I mean, there's a reasonable level. You could put it at the all-time low or close to it. But I like to look for probabilities that the market is going to move higher that are kind of greater than sort of 60, 70%. And at the moment, it doesn't look like a major base is in and we've got a clear run. And in fact, many times I much prefer if the market is much, much higher, but moving in a very different dynamic, i.e. it's trending in a very smooth way, as opposed to trying to pick a low. But in any case, the chart setup has done enough to negate a bearish trade, which would have been if it stayed within this area here, i.e. below that resistance point. And that would have indicated that it was continuing down. So it's pushing against that, which is a good sign. And we've seen some other coins that have made a similar pattern and they push much higher. So I think it's reasonable to expect a further squeeze, but it's not enough for me to want to jump on board. But again, it's still very important to put this in the context of the bigger picture. And it's good to see things that are, markets that are trying to turn around. So it's a wait from me, but definitely want to see it again.
Yeah, it isn't clear it is turning around yet, but it's great to see some price action on Jupiter, and we'll see if it sustains. So generally, we're seeing this big trend. Now, remember back, for those that were, most of you were around in March and April of 2024. So there was a meme coin boom going on, and a lot of the meme coins were launching on Solana. So with the meme coin boom, Solana was doing well. And Jupiter was newly launched, and it was the DEX many people were using. And so their token went absolutely crazy in this environment. And many people were just talking about, many major crypto influencers talking about how much Jupiter they were buying, all at $1.40, $1.50, not realizing that what is up doesn't stay up for forever. So like often happens, things come out, they get this initial boom, and then they've come down. And I do like where Jupiter's price is. It's a lot cheaper. Now their market cap's still pretty high at 622 million, but let's see what their token investing looks like. Ah, notice how sharp their token investing was. So a lot of their tokens came out. There's still a little bit more to be unlocked, and a lot of that's going to be happening. Let's see what these time frames look like. Where's the date? So pretty much monthly, more tokens are coming into circulation, all until December or January. So pretty steep unlock schedule, but not near as steep as it had been. So we might be near a bottom here on price. Interesting. I like it. Now I'm seeing this slow down in the descent. That's good. So it would be a wait for me because I would be waiting for a juicier price around the 14 cents or a little bit lower. I'd keep an eye on this momentum, take it back up. And if I miss an opportunity, I miss an opportunity. But I want to see it at 13 or 14 cents. But it's really close to a very juicy price on Jupiter. I do think Jupiter is one that survives. I think it'll become or be one of the major DEX on Solana, if not the major DEX. But still gets a wait for me because the tokens coming in circulation are going to put further downward price pressure. I'm just not sure it's as cheap yet as it's going to get. Let's take a look at Polkadot, which had a big move. It hasn't really had much momentum in a long time. And let's see what its price action suggests.
Yeah, it's the percentage moves that seem to be really big, and of course, the actual price moves compared to the trends look less impressive. But yes, definitely the percentage moves are quite substantial when these markets move from these very low levels. And I'm sorry to repeat myself, but it is a lot of these charts are looking very similar. We've seen exactly the same thing with a spike low, consolidation, should have gone lower but didn't. We got this spike, it took it out of the range, and now it's squeezing. And actually, the way this is trading in the short term, it looks like we're going to get another move higher. I can see why it stopped where it has, because that's a key resistance point. And if it can get back through there, then we might be looking at maybe $2. But same problem with the bigger picture being negative and it having to do more work to change the trend kind of prevails, really. So interim rally could squeeze a bit more, and I really hope it does, and I hope it goes much further. And I'm wrong and it doesn't stop at any of these lines, or at least it gives us an opportunity to jump on board if things start to accelerate. But for me, it's more a rebound in a bear market, and I've got to treat it like that for now. But it could still have more to go. So it's a wait because of that, but definitely very interesting.
Polkadot's one that I'm curious about. Now, I don't know if this ecosystem is going to survive. I would imagine it will, but they've just had so little time in the narrative since 2021. Really, are there enough people building on Polkadot? Is it going to get enough ecosystem to really survive? And its whole ecosystem has really struggled since 2021. Now, maybe this bull market, if the altcoins have a bull market this year, maybe it gets some momentum. I don't know if it survives long term. So, like Polkadot is one I'm really struggling with. There are some ecosystem plays in Polkadot that are really interesting because their price has been so punished that even if we have a bull market, I think the ecosystem does well, and particularly those ones that are very risky do even better because in a bull market, like every boat seems to rise, and those that are way down sometimes catch more upside. But I'm cautious on their ecosystem because I don't know its long-term survivability. My favorite investments are ones that are massively underpriced, but yet I think they have amazing long-term viability. So Polkadot's ecosystem is massively underpriced if they have long-term viability, and that's a question I don't really know. So even at this price, which is a pretty good price, $1.50, now it's recently all the way down to $1.25, I'm still just not interested enough. So it gets a wait for me. All right, some of the ones, viewer suggestions we had come in. Game Trove not only asked us to look at MapleStory's token, NXPC, he gave us some context. Views on YouTube are down big since the hype of last year. Now, MapleStory is a blockchain gaming project that really had a lot of hype last year and launched their token. More info on vesting for NXPC. Most tokens other than in-game incentives are unlocked. In-game rewards are on a halving schedule with about 25% out now. That we are a year from TGE, and 60% will be out by year 5. So they released a lot of tokens pretty early to kind of stimulate the game, but it's starting to fall off. And so we'll see that as we look at it on CoinMarketCap. Let's look at what the charts are showing.
Yeah, it's if this is the right market, which I think it is, this is usually an indication that the market is going to go lower, and we've got this compression here that is it's a very small tight compression, and the downward pressure is on from these highs. So for me to expect it to go higher is really going against the probabilities at the moment. So the only thing that kind of holds me back slightly is that we have seen a very similar setup in all the pretty much all the markets, and instead of it going down, it's actually squeezed higher. And so there is a chance that this will be another kind of bear market failure, which is a good thing for the bulls, of course. So that is potential, but the way it looks at the moment, I can't justify that as a buy for me. And I'd still say, even though we have seen these things happen before, there are some that will underperform and don't actually react and do fall faster than others. So for me, it has to be a wait. There's got to be more signs. I mean, there are some things that look a bit more positive that I'm still a wait on. So to be fair, it's not just this on its own that I'm more cautious on. I'm more cautious on practically everything. I'm just expecting a bit of a squeeze up in some of the others, and this, it's just a bit more unclear as to whether it's going to even do that squeeze up. But hopefully I'm wrong. Hopefully it does turn around and we get some form of rally. But it's got to do quite a lot more work for me before this trend has changed. And at the very least, we can see we've got this moving average here, 50-day, 50-day, 30-day. It's not really important as to what the moving average is. It's just showing you the direction of the trend. And we've got this trend line. So the technical structure has to change, and it could take a while for it to do that. It takes a while to turn a major downward trend around. There are times when that happens very quickly and sentiment just suddenly flips and it goes into a massive bull phase. But in order to do that, it's got to trip some resistance points and some trend lines. And that's why I put these in there as markers, that if it starts to do something unusual, we get a heads up. But for the moment, for where it is, I think you can see it's very compressed. And in my experience, when the market's done that in other markets, it's kind of continued in the prior direction, and that at the moment is to the downside. So I'm going to be cautious on it, but hopefully I'm wrong and it squeezes up with everything else. But for me, it's a wait.
Yeah. I'm agreeing there. So here they are. They're a little bit hard to find. So I put in MapleStory on CoinMarketCap, and it brought up NXPC, which is it, NXPC. And it confirms it down here in about NXPC. It's Project Introduction, MapleStory Universe. MapleStory is an innovative virtual world ecosystem designed to expand and enhance the iconic MapleStory IP through blockchain integration. Now, a lot of what I'm seeing is, well, number one, we are seeing their token vesting, and there is a lot more token vesting still coming in. So something to be cautious of, but it is slowed down in that it's coming in slowly. See, this is every 6 months it has one of these markers. So you're just seeing slight increases there. Blockchain gaming is not yet in the narrative, so things are cheap. Now, it's got a market cap of 70 million, which, this token was at $2.39 and now it's at 27 cents, but I don't see it turning around yet. Now, blockchain gaming is one of my favorite narratives overall. There's just other blockchain games that are further along their development curve that weren't so recently released that I know I like at the price that they're at because it feels like they're very cheap right now versus what they're building. So Illuvium is a great example. I like Infinity Rising that was branded Cornucopias and they changed their name. I think those are at amazing prices. There's a number of other ones. This one's just got some question marks yet. Now, this may be a really cheap price. I just don't know for sure. And I like to buy ones that I'm fairly certain are at a really cheap price for my expectations. And this one's just not clear enough to me. So for me, it gets a wait. And it's great that it's got that big IP that it seems like it's really big in Asia, but I just don't know if this is cheap yet at a $70 million market cap versus some of the other blockchain gaming projects there or are at much lower market caps that I feel more certain have been extremely price punished. And yet the game development is coming quite well. All right, let's take a look at DEVVE and OMI and see where they're at.
Okay, so I'll start with OMI because I've just got the chart up there, and pretty much the trend is still down. Actually, we've got a question that's in there from Dan's Crypto, so maybe we could pick that up because he's asking something that I think I might be able to learn something from. But in terms of the actual price against the US dollar, I certainly think, or against USDT, the trend is still down. And whilst there have been some pockets of strength, and whilst there's been a certain amount of saturation because it went down before others and hasn't made new lows, it's still in this downward trend and it needs to do more work before I can class it a buy. And we've had pockets where it's been a short-term buy, but it's not been able to hang on and it's been sold into. So for me, in the short-term trend and the long-term trend, they seem to be lining up. Now, it is above the prior low, the all-time low on this particular chart. Now, it might not be the all-time low going back further, but it's approaching what I would say is a key level that makes me nervous that it's going to break, because if it does that, you tend to get certain reactions. It can work where these levels act as support and you get buying in and the market turns around. So the uncertainty there is not enough for me to want to step in and put a trade in there. I'd want to wait and see. So that's where I am. It's still a wait for me. I've got to see a bit more evidence that it's turning around and the structure has changed. We did get some signs that of turning, the market turning around and it looking bullish and moving against the general trend, which was great here. But the big level, as I keep saying, is all the way up here. It's got to get above there and sustain it for me to long term be more comfortable. And we can try these little pockets of strength and try and ride them, but ultimately it's got to get above some major resistance before we can say it's out of the woods. Now, part of a basing pattern is that it does this for a long period of time and then starts to go up, and that is certainly possible. We may need to just grind sideways for a while longer before it's this sort of section is over, and then we start to get the realization that this is cheap and the market wants to go higher. But from a pure technical point of view, and without me looking at any of the fundamentals, we're not at that stage yet. And when we see it, we'll see it. But for now, I'm going to have to sit on the sidelines and say it's a wait.
Now, OMI is one that I like considerably. Now, its market cap is down to $34 million, which I think is amazing. Is in the past has been at over $1 billion market cap. So it's down so considerably. And I like this. Now, OMI is one that I know very well what's going on with their underlying business, VV and the VV app for digital collectibles. And I'm more bullish on their future than ever. And yet their price is extremely punished. And this sometimes happens in investing. And this is why I like to take the strategy that I take for investing. And I'll give you an example. When I was at the university and I was studying business and management information systems, and I was working in the internet programming side of things, I used a tool called Macromedia Flash and some other Macromedia programs, Macromedia Dreamweaver. And I could see in the programming space that Macromedia Flash and Dreamweaver were selling tremendously well. And yet the token or the stock price was way, way, way down, even though I knew their revenues were doing super well. So I bought some stock related to Macromedia, and I had a friend that worked with me, and he put in, I think, $2,000 into Macromedia stock as well. Now, over the next few years, like for a long time, the stock didn't pump, even though things were going so well for it. And it was puzzling to me, as I was fairly young and new to watching markets, that the price stayed irrational for quite a while. That Adobe's earnings were down, and yet Macromedia's earnings were way, way up. And so because it was in the same sector, Macromedia stock price did quite poorly, even though revenues were like they were gaining so much market share and traction for such a small player. But over the next few years, that $2,000 my friend invested turned into $7,000, which is quite considerable for stocks over a few year period. And so I was right that, wow, just because it was severely price punished, that wasn't a bad thing. That was a great thing because the underlying fundamentals on it were really strong. That's how I feel about OMI. And that's why I'm so bullish on OMI. OMI is one of my larger holdings in the crypto space. And I feel like this price is absolutely amazing and incredible. Like for me, this is a massive buy zone that's super exciting that it ever hit these prices. It really should, in my opinion, never have hit these prices. And yet here it is. So sometimes incredible life-changing deals happen, and yet most people pass them up. Just like when I was at the university, I told everyone I knew about Macromedia being so underpriced, and only one friend bought it. And I told them the timeline to hold it was 3 to 5 years, and that's exactly what he did. And it worked out amazingly well for him. He had the patience to sit through the next 6 months where it seemed like it just went down further. And then it started to go up, but it really didn't see bigger gains for a year or two. And so this is one of those timeline things that I don't know if OMI is going to get even cheaper in a month or two. But at some point, because the strength of the underlying company, in my opinion, I think this one does extremely well in the future. That they become one of the number one players in the digital collectibles space as the digital collectible space becomes gigantic. And right now it's just quite small. All right, let's take a look at DEVVE's token price, which has been absolutely down in the dumps. And let's see if there's any signs of it turning around.
Not from where I'm sitting at the moment. Again, the last time the 2 times before when we looked at it, we were approaching this support area. And again, the risk is that it gets through and we see this kind of waterfall move to the downside. It's been volatile below, but this is a kind of line in the sand for me where it's got to get above there before I'll or some technical pattern, some very significant technical patterns got to occur before I will change. Or it's not a question of me changing my mind. It's whether the market gives a technical signal that I recognize that indicates that the market has a better probability of moving up rather than down. And at the moment, it's not doing that. It's still being sold into in terms of each rally. We're seeing the weekly low here on the price action. Of course, that can turn around, but it is very close to its all-time low. And the way I look at things in terms of strength and weakness, it's weak, and therefore I'm not going to step in until I see some strength. So for me, I can totally accept the market may have got this wrong, and that might be the case, but the way technical analysis works for me, it's price action that's important. And although it may not reflect the fundamentals, until it starts to reflect and still sentiment changes, I can't fight against that. So it's definitely a wait until we see a change, but I'm always happy to look at it. And, hopefully we'll get those reversal signs in there and it will start to go up.
Yes. They had a massive shift and essentially some massive business changes that precipitated this dump. And that, some of the team was let go in order to cut expenditures and to make them more solvent for long term and increase their runway and decrease massively their burn rate. Now, a lot of people see this as bad news, and it is a sign of bad news, meaning that their revenues aren't really keeping up with what their costs are, if they have any revenues at all, and they are, probably running low on funds. So it's good that they made these changes for the long-term survivability, but it's not good that it had to happen. And this is often what happens in early stage business projects. Now, it's smart that they made these cutbacks, massively decrease the size of the team so they could survive, because that's much better than burning through all their cash and then closing down and going out of business. But it's a sign of trouble, and that's why the price went down considerably. It was already cheap at 40 cents and now going almost down 90% from there. Well, is a sign that there's trouble in paradise. Now, the shifts that they're making, I think, are quite bullish. I think that the shifts of decreasing their costs, especially with the advent of AI, because they are in a space that a lot of their overhead costs for operations are programmers, they can get way more done using AI to help their junior programmers program and let go of their senior programmers. So their operating costs go way down, and yet they can keep up and maybe even put way more development towards what they're trying to do out than they could before. So these are major positive things that are happening for DEVVE. In the short term, it's expected that they would have this price punishment. In the long term, well, they're really going a novel route with AI of actually utilizing many of the different AIs to fact check each other to get the best answer, because the AIs have different biases. And so they're developing software that uses all the different AIs out there, all the major ones, and uses them to fact check each other and other things so that you can get far more through what they're doing than just using one AI itself. So the direction they're going is awesome. They're doing an additional funding round, I think, for equity. Some people are trying to raise some capital so they can put that capital into customer acquisition. So is it a buy at this? Well, it's kind of a buy at this, meaning it's definitely in a risky zone. Now, I took a chance on something that went into a risky zone like this in July of 2021 on Luna. Now, Luna was on its way to failure, many people believed, and I bought it on a massive discount, and I put in just like $1,500. And over the next 4 months, that $1,500 turned into $72,000. Now, we're learning that Luna was a eventually collapsed. But it seems like there's a player that's been identified as the one who used insider information in order to collapse them. But what was interesting was a small amount of investment turned into a huge amount at a risky flexion point in a company. So this is a risky flexion point. So this is not something to go in with huge amounts of money, but one to go in with smaller amounts that have outsized upside potential. So if I were looking at this now, keep in mind, DEVVE is one of my largest positions in crypto. I am bullish about their long term, but being real, it is a very, very cheap point, and that's what drives this. Keep in mind, it's also risky. So if you're putting in, if you like this risk versus reward, it's high risk, but it's extremely high reward at this flexion point. Then smaller amounts can get you massive upside gains. Now, if you're going in with larger amounts and putting in your biggest position at this time, it's just, in my opinion, not a diversified enough risk that I would be taking. But I do like DEVVE. I like Tom Anderson, who leads DEVVE. He's always been so honest, straightforward, hardworking, and extremely brilliant. So I do believe they'll turn around and this will go quite well. But Axie Infinity, one of my biggest returns in 2021's bull run, reached 2 points in the bear market where it was at a flexion point like this that was very nerve-wracking. Now, what I wouldn't do is I did not sell my position at that point, even though it looked like they might fail. But I also didn't put more in. Now, thankfully, they recovered. They did incredibly well and were one of the biggest gainers in 2021's bull market. And I hope the same for DEVVE. But we'll see at this point. It's an inflection point that's got some signs of trouble. It's got some massive upside potential at this price. And so we'll have to see how the coming months go with it. So it's kind of between a wait or a buy with smaller amounts of capital, not huge amounts. For me, if I were sitting with $1 million liquid, would I put some in this? Yeah, it'd probably be in the 50,000 range, maybe 80,000 range out of $1 million. So 5 to 8% of my deployable capital in that environment. All right. Cool. That's all our suggestions. Now, I like Vladimir's comment. I meant to bring it up sooner. Raoul Pal is one of my favorite analysts. He's brilliant. And he advises a lot of sovereign wealth funds. He makes very good money being an advisor to some of the richest people in this world. And he says it's the business cycle that's driving and everything, and it's extended. And he believes still this massive run is still coming. That there's this debt refinance cycle that has to happen that's going to put a lot of cash and liquidity into things. And that crypto, really, the altcoins have yet to boom, but that is still coming. All right. Paul, thank you for joining us today. It's been a fun episode.
Yeah, my pleasure. Thank you for, changing the schedule. And I should be Wednesday next week. So I can't see anything in the diary, but, I appreciate you making the change, and we'll see where we go from here. So thanks for the picks. Thanks for all the comments, and we'll see you next week.
All right. We appreciate you jumping in and making this week happen, even though something came up yesterday. I know my audience loves it when you join us. Thanks, Paul.
Appreciate it. Thank you.
Well, a lot of people are scared with the crypto market doing so poorly. And what does poorly really mean? It means prices are really, really cheap. And is that a bad thing? Not when you learn to see things right. Not when you're a value investor and you're buying on fundamentals versus buying into things that are already hot. So yes, the market is way cheap and there are deals everywhere. Now, I hope you learn to rewire yourself to see things correctly. I know it's hard, and truthfully, some people can't do it. What I share with people on how to do this right, I wish it was for everyone, but it's not. Are you patient enough? Are you tenacious enough to let this work for you? I hope you are. If so, in my opinion, there is no better way to build massive amounts of wealth in a shorter time than successful crypto investment. But how to be successful is literally buying when prices are really cheap. And it seems like nobody is buying because very few people are. And most are scared. And then waiting to see if it plays out. Now, you're not just buying anything. You're buying specific projects that have fundamental strength that are just outside the narrative right now. And you're hoping and expecting it will come back into the narrative, has enough runway and enough viability that can survive till that happens. And then it absolutely blossoms on you. And you don't even have to get all of them right. If you diversify and you get 50% of them right, or even 30% of them right, you can still make outsized gains if your research is leading to you to good projects. It's an amazing time to be here in crypto. Most don't realize it, but this is where the next millionaires and billionaires are being made, is in this environment, because you make your money on the buy. Don't forget that. All right, this wrap just wraps up our episode. And these principles I share in the wrap really are what leads you to thinking like the 5%ers.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, you buy before you could. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that. And I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. The principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I'll be selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. Naysayers come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crafting. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough. And that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.